be bankrupt. And so just look at this. This is a use case of why we need regulation. There wouldn't be this tragedy and all of this drama and all the rest of this stuff and the loss of billions of dollars. The lack of regulation has caused some problems here, and it will continue to. And the evidence is right here. The only entity that didn't go to zero in the FTX portfolio, CFTC, forced the scrutiny, forced the transparency, forced the proof of where the assets were held and the reserves, forced the lack of commingling with the assets. They forced it. They did it. Proof positive that you can regulate this asset class.
I want to thank you all for being here today. We'll have some questions for the record, but I appreciate the hearing, Mr. Chairman.
Thanks, Senator Chester. Senator Haggerty of Tennessee is recognized.
Thank you, Mr. Chairman. Ranking Member Toomey, thank you for holding this hearing. To all of our guests here today, I appreciate your being here. I'd like to touch on something that has been troubling me for some time. We know that FTX's collapse as the second largest exchange is continuing to have ripple effects throughout the entire digital asset industry. But if you look back to even early November, FTX didn't appear to have the necessary scale to cause an industry-wide systemic meltdown. Binance, on the other hand, is the largest global crypto exchange, nearly 7 times larger than FTX by trading volume. At least it was in the month leading up to FTX's collapse. And Binance's market share, now with the absence of FTX, I think means it will only grow. If you think about a similar implosion by Binance, that would really prove catastrophic. It'd prove catastrophic for the cryptocurrency industry, and it would prove catastrophic to all of the consumers that utilize the industry. Yet U.S. regulators are limited in the extent to which they can mandate appropriate audits or appropriate disclosure of Binance's operations. Unlike the requirements placed on companies which are publicly traded here in the United States, Binance operates outside of our system. So, Ms. Shope, I'd like to start with you. How can U.S. regulators work with their global counterparts to bring transparency to Binance's activities and to understand the reserves that it holds?
I think you raise a very important point that when we talk about FTX or we talk about Binance, so much of what we're talking about is happening outside of our shores. And the influence that U.S. regulation can have on those exchanges and other crypto projects that are not taking place here is limited. I think it's very important to have an ongoing dialogue with international regulators in order to have influence where we can. But I think the most important thing for the United States to do is to create a rational crypto regulatory framework in the United States to try to bring some of that home so that we have maximum influence over how those businesses are operated.
I hear you, Mr. O'Leary, you touched on this just a moment ago about the impact of regulation and the certainty that it could bring. And from your perspective as an investor, Mr. O'Leary, what needs to change here in Washington from a regulatory standpoint so that capital actually does flow to U.S.-based entities and empower U.S.-based entities to win on a global stage?
Every global platform, the number one prize is to be regulated in the U.S. market, the number one financial market on earth, period. Now, when you talk about other money center banks or other financial services industries that want to do business in the U.S., they must disclose their worldwide operations. They are scrutinized by the rules we already have in place. A coordinated effort between the Canadian regulator, the US regulator, the ADGM in Abu Dhabi, the regulators in Singapore, basically laying out the ground rules for any entity that wishes to do business in the US or any of those jurisdictions, solves this problem. If Binance is not willing to, and you started by talking about them, disclose, and the reason that Sam Bankman-Fried claims he spent $3 billion was that he could not get the regulators to approve the fact that Binance owned 20% of their platform. CZ was not cooperative with any of those regulators. He was shut out of those markets, and he realized the prize was to get regulated for institutional capital. Just having 4 or 5 markets coordinate, as we do already in other securities, solves this problem in perpetuity. And all these regulators talk to each other. I've been to Abu Dhabi. I've talked to the ADGM. I seek a license there. And I've done the same in Canada. I'm an investor in the license there. These are long-term, very sound structural concepts, but it needs a coordination. And in one phone call, we could solve this problem.
I'm going to come back to you, Ms. Shope, for a moment. And I want to stay on this concern that I have, particularly about Binance, about the Chinese Communist Party's role and support of that. To be clear, Binance is being proliferated around the world. It's a state-backed network. They're proliferating in emerging markets in a very predatory fashion. They're in developed markets. And again, now they have an even more open platform as FTX has been taken down. But if you think about an example like Binance with ties to the CCP, a committed partner to the Belt and Road Initiative, and particularly as it expands its market dominance with the collapse of FTX, what does that spell if lawmakers here in America follow through with their threats to ban digital assets or leave the current regulatory uncertainty in place? What does it mean for the global crypto market in general? What does it mean for our nation's national security and our economic security? And most important, what does it spell for the dominance of the US dollar as the world's reserve currency?
Regardless of whether Binance itself is connected with the Chinese Communist Party, which Binance denies, but regardless of whether that's the case, by having a system in the United States that's unclear, that's regulatorily hostile, it could go so far as banning cryptocurrency in the United States, we would be losing the position of having the possibility to maintain American dominance for these technological innovations.
I'm deeply concerned about that.
We would also be losing many of the great minds that want to work on these types of projects that can make strides not just in blockchain and cryptocurrency, but in other technological functions as well. To the extent that the United States is not a place that people look to for economic development, that also puts the US dollar at risk.
Thank you. Thank you, Mr. Chairman.
Thanks, Senator Hagerty. Senator Warren of Virginia is recognized. Senator Warner of Virginia is recognized.
Thank you, Mr. Chairman, and appreciate you holding this hearing. I want to echo some of the concerns my friend from Tennessee just echoed about Binance. I do think it's curious that China has made the decision to basically take that kind of risk to ban crypto because of their at least risk-reward analysis. I got so many questions. I do think I know a lot of this started around Bitcoin. I still think, and I think, Professor Allen, you may have touched on this in your testimony, the clunkiness of the technology behind Bitcoin. I mean, you could never go to scale no matter what. If you can only do 5 or 6 transactions per second, that is not a scalable tool. And obviously at technology, at a power and environmental costs that just doesn't make sense to me. But I'm going to try to get as quick as I can in my 4 minutes. I'm going to start with Professor Allen and Mr. McKenzie. I sometimes worry that FTX is just the tip of the iceberg. I'm sure many of my colleagues have gone through all the bad things Bankman-Fried has done, and the graft, and the Ponzi schemes, and so forth. But I know Senator Hagerty already made comments about the Reuters story about Binance. I really worry. I mean, I know the original pitch was this is going to be a seamless ability to transact without currency risk, without timing risk. I can send my grandmother in Kenya, resources on Sunday in a way that's kind of error-free. Sitting where I do on the Intelligence Committee as chairman, I've seen virtually no examples of that kind of use case. I know, Mr. McKenzie, you've gone down to El Salvador where they tried to make that as the case. It just doesn't seem to be the case. Instead, we are seeing, at least at this date, and Senator Lemus has been a leader on this. I keep trying to have an open mind on the technology innovation, and I'm all in on technology innovation. But at least so far, from where I sit on the Intelligence Committee, I see an awful lot of illegal activity. I see drug deals, I see bad actors, I see ransomware criminals, and frankly, it's not even safe from them. Go back to the Colonial Pipeline issue where our government, when payment was made in crypto, was able to recover some of that. So I guess I'd start again with Professor Allen and Mr. McKenzie. Do you think FTX is a one-off, or is this the tip of the iceberg where we may be seeing a whole series of activities? And if you want to go ahead and I know it's been raised, but I don't think it in any detail, Alameda Research and some of the potential, I think we're only beginning to see the conflicts that were taking place there. But I'll start with Professor Allen and Mr. McKinsey.
I think we saw the tip of the iceberg a couple of months ago, and then this is sort of moving further down the iceberg, with the earlier rounds of Terra Luna and Celsius. The concern is that, that fraud is definitely being perpetuated, but that the whole industry itself is basically an asset class built out of nothing. It trades entirely based on people's belief that it can be worth something. But as he said, the technology has not worked for a payments mechanism. It's become a speculative instrument, but ultimately, as Mr. McKenzie said, it's a zero-sum game, and if people stop believing in it, then it all falls apart. So Mr. O'Leary has talked about how people, that regulation in the United States is the prize. That's exactly right. Without that regulation as the prize to legitimize crypto, there is nothing there, and it could all go to zero. And whilst that is very bad news for the people who've already invested, I think it's very good news for the rest of us because it's been kept out of the broader financial system, and we won't suffer the consequences from its broader failure.
Mr. McKinsey?
Thank you, Senator. Yes, I just want to echo what Professor Allen was saying. One of the many, many seemingly limitless ironies of cryptocurrency is that the supposedly decentralized nature of it it's in fact highly centralized. I know this. I wrote an article with my colleague Jacob Silverman for the Washington Post about Binance this spring. Binance is incredibly murky, but Binance, as Mr. O'Leary, as other senators have pointed out, Binance is in communication with FTX. They were an early investor in FTX. There was there's a private Signal chat group entitled Exchange Coordination that CZ is on. Yes, this is publicly reported. I believe Mr. Bankman-Fried submitted it into the congressional record. And so they're all talking to each other. The crypto industry is actually really, really small amongst the people that count. In a zero-sum, strictly competitive game, there's winners and losers. In an unregulated zero-sum, strictly competitive game, you're either a scammer or a mark. If you don't know which one you are, you have a problem. Do you want me to answer the remittances question? I'm sorry, sir.
Well, if you want to just touch on Alameda as well.
Sure. So Alameda is Tether's biggest client. That's according to reporting from Protos from last year. Supposedly, Alameda purchased, I believe, $36.7 billion worth of tethers. Given Alameda, FTX's insolvency, I think one question might be, where'd the money come from?
Yeah. Let me just, I know my time, but Mr. O'Leary, I have a great respect for you as an entrepreneur. Spent a long time as an entrepreneur. I'm trying to sort this through as well. I get your point, but I guess what I'd raise for the chairman and the ranking member is, I'm still trying to wrestle with this in my mind, whether we need a crypto set of rules or whether we frankly, what are we, 14 years after Dodd-Frank, ought to take a bigger step backwards and realize we got this bright, shiny problem over here around crypto, but the amount of financial activity, you look at the fact that over 50% of the mortgage origination now is outside the regulated banking sector. I've been a big advocate for fintech for a long time, but there are a whole series of lending entities out there, again, that have no regulatory protections around them at all, and nothing would be worse than doing a relatively good job. We may overdid it in certain parts on Dodd-Frank, but put a structure around our regulated industry and suddenly see this huge escape of financial activity going outside any kind of regulatory envelope at all. I'm all for innovation, but Lord knows if crypto was suddenly followed by a whole series of fintech entities that were coming back saying, hey, I need my money back as well. I didn't get my lending that was taking place on this platform. We could have a problem. Thank you, Mr. Chairman.
Senator Lummis of Wyoming is recognized.
Thank you, Mr. Chairman. I also want to thank Senator Toomey for his wonderful leadership on this committee. Just in the event this is our last hearing, thank you for your service.
hearing tomorrow.
We're conflating topics today. Digital assets are not on trial. Fraud and organizations are on trial. So let's separate digital assets from corrupt organizations. FTX, as I've been saying for the last few weeks, is good old-fashioned fraud. And what they did is separate from digital assets. Now, we've all heard that FTX lent its executives hundreds of millions of dollars in commingled customer funds for personal use, and customers who tried to wire money to FTX were instead given Alameda's routing number. That is fraud. That's fraud whether it's conducted in US dollars or euros or digital assets. That is fraud. Additionally, even though FTX was a multi-billion-dollar enterprise, it had a shocking lack of corporate controls and enabled affiliates to conceal the movement of money and take on enormous liabilities, enabling the they misused customer assets that were supposed to be appropriately safeguarded. FTX, in its terms of service, said, title to customer digital assets always remain with the customer. Now that we know is a lie, and now millions of FTX customers around the world will suffer. So FTX is a failure of people, safeguards, and regulation. It's not a failure of technology. The people of the digital asset industry need to get really serious about risk management and compliance with things like anti-money laundering laws. And that's why we've seen a failure of a number of firms engaged in riskier practices, even for the digital markets this year. So one question people should ask themselves is how FTX grew so quickly. They were founded in 2019 and grew to be one of the largest digital asset exchanges in just 2 years. So you look at other companies like Kraken, Coinbase, and Bitstamp, they've been around for a decade. They've grown organically. This committee needs to be focused on putting legislative solutions in place that would have prevented FTX's collapse and other firms like it. This means things like regulation of digital asset trading, providing consumers with adequate bankruptcy protection, disclosures, and stablecoin regulation. So let's not conflate topics here. Mismanagement, failure of people, inadequate controls is what's on trial. We need to regulate this business and lay digital assets on top of our existing financial regulatory framework. Questions? Ms. Schulp, why do digital assets and distributed ledger technology have the power to make our capital markets safer and more efficient?
Well, there's multiple ways that they can do that. And one of them is by removing the intermediaries that we've been talking about, where there are potential for such things as an FTX to take customer assets and misuse them. When those intermediaries don't exist in digital asset systems, then you don't have the same risks. You can also have faster, cheaper payment systems than we currently have, and more global payment systems which allow people to send money cross-border in a way that should be very important for a country like the United States, which sends a lot of remittances across the world.
I know I'm out of time, but I want to make a plug for the Responsible Financial Innovation Act that Senator Gillibrand and I have co-sponsored, that we've been talking to our colleagues about. This is a case study in why we need the Responsible Financial Innovation Act. We will be reintroducing the bill next year. We're absolutely delighted and willing to take your comments, suggestions, ideas, and it's time to move. time to move to regulate the digital asset industry. Thank you.
Thanks, Senator
Mr. Chair.
Levin. Senator Warren of Massachusetts is recognized.
Thank you, Mr. Chairman. So Sam Bankman-Fried and other crypto billionaires argue crypto is special. But a basic principle of our financial system is same kind of transactions, same kind of risk, means same rules apply. Right now, if a bank takes money from terrorists and the bank and the banker then have broken the law. And that's why banks spend so much time and so much energy identifying who their customers are and reporting suspicious activity to authorities. A lot of crypto firms are not doing these kinds of checks. So crypto has become the preferred tool for terrorists, for ransomware gangs, for drug dealers, and for rogue states that want to launder money. In 2021, at least $14 billion in digital assets went to criminals. Now, that's a lot of drugs and a lot of ransoms and a lot of bombs and a lot of nuclear materials, but it is likely only the tip of the iceberg. A new report finds that one crypto exchange alone helped launder over $10 billion for criminals and countries like Iran. Even so, the crypto industry continues to take the position nothing should change. Professor Allen, the crypto industry claims that it doesn't need to do all of the know your customer and other anti-money laundering checks that banks do and stockbrokers do, and even Western Union does, because crypto is uniquely transparent. Everything is on the blockchain, so criminals and rogue states that try to launder money in crypto will quickly be found out. Does the fact that the blockchain is public mean that it is more difficult for criminals to launder money using crypto?
In many ways, the blockchain is the worst of all worlds. For everyday people, the blockchain is a permanent public record of all their transactions, which is a privacy nightmare. But for sophisticated players with a vested interest in hiding their transactions, there are all kinds of tools available, mixers, tumblers, et cetera, that can hide the provenance of their crypto assets. And far from being difficult for criminals to use crypto to launder money, the fact that there aren't KYC checks is the point.
Okay, so crypto is actually easier to do money laundering. Let's look at another crypto industry argument. Professor Allen, the crypto industry claims that it would be too much trouble and maybe even technologically impossible for them to check customers the way that banks and stockbrokers and even Western Union does. But let me ask, do banks and stockbrokers in Western Union have to invest money and resources to make sure that they're set up to conduct those checks?
Yeah, I mean, KYC requirements are simply part of operating a financial services business. But avoiding those requirements, as you say, is critical to many crypto business models. Blockchain-based transaction processing, as we've discussed, is very clunky and expensive. Ms. Schulp has just told us that it can be more efficient. The only way it's more efficient is if it actually avoids the KYC checks that can slow things down. So this crypto business model is in many ways a regulatory arbitrage play.
Right, and so actually it's an interesting question. If banks and Western Union said they shouldn't have to follow any money laundering rules so that they could make more money, they could improve their profitability, what would our country say, and what does every country around the world in the financial system say?
No.
Right. Okay. So, Mr. O'Leary, I know that you are a big supporter of crypto, even after you lost $10 million in FTX's collapse. But you are an experienced investor. So let me ask you, do you believe that the potential benefits of crypto are so promising that we should accept weaker anti-money laundering rules and weaker compliance from crypto firms than we require from banks, from brokers, and from Western Union?
No, I think we should apply the same regulatory structure that we apply to existing trading of stocks and bonds on exchanges tied to broker-dealers. That is not complicated. It's already been implemented in other countries. And so, and I take issue, Senator, with your concept that it makes it easier to do money laundering. Currencies have been used for drug trafficking since the 60s in the American dollar when it was thrown out of a Piper aircraft in a duffel bag. The American dollar is also used by bad actors all the time.
Mr. O'Leary, I appreciate your point that everyone tries to engage in money laundering. That's what terrorists do. That's what drug dealers do. And that's what states like Iran and North Korea have done. The only point I'm trying to make is, should the same rules against money laundering apply to crypto in the way that they apply to banks, to stockbrokers, to credit card companies, to Western Union? And I think your answer to that was yes. Is that right?
No.
Mr. O'Leary, you have 30 seconds. Keep your answer short. You're
It's
30.
not yes. I'm just saying if you know your client rules on both sides of the transaction and use a crypto such as USDC that is regulated, you solve this problem, Senator, overnight.
Well, I appreciate that you want the same kind of rules to apply to everyone, and we can talk about what's needed to make that happen. You know, the dark underbelly of crypto is its critical link to financing terrorism and human trafficking and drug dealing and helping rogue nations like North Korea and Iran. Crypto doesn't get a pass to help the world's worst criminals, no matter how many television ads they run or how many political contributions they make. It is time for Congress to make the crypto industry follow the same money laundering rules as everyone else. That is why Senator Marshall and I introduced a bipartisan bill today that requires crypto to follow the same money laundering rules that every bank, every broker, and Western Union all have to follow today. Thank you, Mr. Chairman.
Senator Van Hollen of Maryland is recognized.
Thank you, Mr. Chairman, and let me add my words of appreciation to Senator Toomey for his leadership on all sorts of issues. I've disagreed with Senator Toomey many, many times, but I've also had the opportunity to work with him closely on lots of issues. So, Pat, thank you. And thank all of you for being here. You know, over the last more than 2 years, I think this committee has been trying to take a crash course on crypto and understand all its implications. And I think the fact that we have 4 very bright individuals here with diametrically opposed views is an illustration of the challenges we're facing as a committee. But I do want to pick up where my colleague, Senator Tester, did. Because the question is, where do we go from here? And on the one hand, the impulse is, of course, to want to protect consumers. On the other hand, we want to make sure that in the process of trying to do that, we don't give a government imprimatur to a system that is so inherently risky and without necessarily any, as at least 2 of our witnesses said, underlying value. So, Professor Allen, if you were king, queen for the day, what would you do right now? And let me just say, we've got the SEC. The SEC clearly has the authority and power to go after fraud. And we need to make sure they have the resources to go after fraud in this area because it's grown very fast. But beyond using the existing tools, what would you do going forward?
If I were queen for a day, I would ban it. But if I were someone who was dealing with multiple constituencies and realized that that might not be viable, I think the path I would take would be to strengthen banking law, what I've been calling Glass-Steagall 2.0, and make it quite clear that banks simply may not touch crypto in any way, shape, or form. And then I would give the SEC more money. I would pass legislation that makes it clear, abundantly clear, that all crypto is a security. And to be clear, the definition section in the securities legislation doesn't just list investment contract. This isn't just about the Howey test. There's all kinds of securities that don't go through the Howey test. Bonds are just listed. If it's a bond, it's a security. So we could say, if this is a crypto asset, it's just a security. You don't have to go through the Howey test framework. And then we apply all the securities laws, robustly, and I think that is the best way forward.
Thank you. And is it Mr. Schenken, Mackenzie Schenken?
Yes, sir. You can also call me Ryan Atwood from the
All right. All right. Well, in that case, listen. Let me appreciate your testimony. The bottom line, as I understood, is you said we should just deal with this and regulate it like it's gambling. And, you know, I've been listening to analogies to Enron, even analogies to the, you know, mortgage meltdown, mortgage-backed security meltdown. At least in those cases, they are backed by real assets, right? In the case of Enron, you've got an energy-producing company. In the case of mortgage-backed securities, it was an outrageous scandal. At the end, there was it was supposed to be backed by real houses. What is this backed by, if I could ask you? What is this backed by at the end of the day?
Nothing. It's a story. Robert Shiller, the Nobel Prize-winning economist, talks about how economic narratives form. They're in response to real events. In this case, with cryptocurrency, I would argue the genesis was the subprime crisis. The Bitcoin white paper, released in October of 2008, was perhaps well-intentioned. It was intended to be a peer-to-peer currency that would avoid all intermediaries. So the story has understandable appeal. I think if crypto serves any function, it's to highlight the myriad failures of our regulated system and our banking system and our American economic system to provide people with a fair shot at the American dream, or what's left of it. That does not make the story true, however, the story of cryptocurrency. What it does is lend it enormous power. And these stories spread, as Shiller describes, like viruses, infecting one person to another, much like a multi-level marketing scheme. But you know, for the digital era, instead of a 5-hour Tupperware party, you get a 60-second TikTok video. And you're encouraged to invest because you see other people investing. They call it FOMO, fear of missing out. We used to call it greed. People get very excited. These bubbles build up very big, but then they collapse very swiftly. And I think that's what we're seeing now today.
Thank you. Thank you all.
Thanks, Senator Van Hollen. Senator Cortez Masto of Nevada is recognized.
Thank you, Mr. Chairman. I too want my kudos to our ranking chairman. Thank you so much. It's been a pleasure to work with you. We've not agreed on everything, but you are a gentleman, and I do always appreciate the opportunity to have an open line of communication with you, so thank you. To everyone here, thank you. This obviously is something we have been working on for a period of time here, and really appreciate the insight you all bring. I do want to follow up on my colleague, Senator Van Hollen's line of questioning with Professor Allen. I want to ask the rest of you. Clearly, she's supporting banning it. If we don't ban it, how do we regulate it? She put forth a proposal, which is isolate it from the banking system and then define it as a security. Does anybody disagree with that or have any other ideas about how it would be regulated? Mr. O'Leary.
The concept of passing legislation that would ban banks from integrating cryptocurrencies and crypto technology, if that were to happen as an investor, I would short every American bank stock because it would make it the most uncompetitive financial services sector in the world. The innovation that is coming forward, once regulated, is going to be profound in terms of how it changes the cost, the efficiency, the auditability, the productivity of the banking sector. Just look at things as simple as ACH transfers, how archaic they are. Look at the Fed wire.
So let me just stop you there. I only have so much time. So you do not agree with isolating it from the banking system?
That's insanity.
Okay, Ms. Schultz?
No, I also don't agree with isolating it from the banking system. I do think that if I were queen for a day to regulate, I would ask Congress to make some clear lines here with respect to what is and is not a security. And I think a lot of crypto tokens do fall under the category of security, but it's not always clear. I also would ask Congress to draw clear lines as to which market regulator handles secondary trading, giving the commodities segments to the CFTC and the securities segments to the SEC. That should put good guardrails in place in order to apply similar risk frameworks to similar risks.
Thank you. Mr. Shankman.
If we allow cryptocurrency to infect our banking system, we will be back here.
Thank you.
We will be back here, not in a good way.
And Professor Allen, anything else to add? So I'm going to ask you, because I also appreciate your conversation with Senator Tester, and that's really focuses on why we should isolate it from the banking system. But let me ask you this. Many crypto advocates have taken this scandal that we are talking about today as an opportunity to suggest that the failure of FTX was due to its centralization and argue for decentralization finance, or DeFi. Can you talk a little bit, would that have made a difference? And what impact would DeFi lead to possible greater centralization of wealth? I mean, can you talk a little bit about what that means, if anything?
Sure. So DeFi stands for decentralized finance, but that's a marketing term because it's not actually decentralized. As I mentioned earlier, technological decentralization and economic decentralization are not the same thing. First of all, DeFi is highly integrated with the centralized crypto ecosystem, and it's not sure that it can survive without it. And then even within DeFi, there are so many intermediaries. At the underlying blockchain level, you're trusting the core developers of the software that runs the blockchain and the validators who implement the software changes. On the next level up, you're trusting the people who program the application that runs on that blockchain. Now, the people who program that are controlled by the people who own the DAO governance tokens. So you may have heard about these DAOs, these decentralized autonomous organizations. They're basically like creating a partnership on the blockchain. The ownership of those tokens, it's meant to be decentralized and dispersed, but that's not the reality. The economic reality is that for a lot of these things, like 90% of the tokens plus are owned by a single person. So, saying that I could, me having one governance token in a DAO is like me buying a share in Tesla and trying to tell Elon Musk what to do, right? So economically, it's very centralized the whole way up and down. And so, much like many of the stories that Mr. Schenken's been talking about, it is a story. I really get why people want these things. Wouldn't it be nice if we could create a world where we didn't have to trust intermediaries who have made so many mistakes so many times? But the reality is that economic power concentrates in these places, and we can't avoid intermediaries. So what's the point of DeFi?
Thank you. I know my time is up. Thank you, Mr. Chairman.
Thanks, Senator Cortez Masto. Senator Smith of Minnesota is recognized.
Thank you, Chair Brown. I'm going to direct my first question to Professor Allen. So the collapse of FTX is shocking, but it's hard to say that it's surprising, right? I mean, it's hard not to conclude that this crypto exchange and its related firm, Alameda Research, completely failed to safeguard the money of the people they entrusted their money to there. And we shouldn't lose sight of the fact that millions of dollars disappeared overnight, and that this is money that belonged to people who couldn't afford to lose their money. So, Professor Allen, I want to get at this question of consumer protection pretty quickly. So people are free to invest their money pretty much however they want to, but they deserve to know that the market is fair and that there are rules that protect them from bad actors, so they're not getting ripped off. So exchanges and firms that buy and sell stocks and commodities are required to keep company money separate from their customers' money. They don't get to gamble with their customers' money without asking permission first. Is that correct?
Yes.
And that's not the case with what we saw with FTX, what we see often in crypto. Is that true?
I mean, they often say in their terms of service that they won't do it, but they do it anyway.
Yeah, I think that's right. And when a firm is being paid to give advice to their customers on how to invest their money, they have to put their customers' interests first, right? That's the basic fiduciary responsibility. Is that the case in crypto right now?
So, I mean, I think there's a big concern here about crypto being incorporated into things like pension funds and also into 401k plans. So the Department of Labor has been very clear that they don't think that this is the type of thing that belongs in any kind of sort of retirement saving. Unfortunately, Fidelity has made the move to allow people to invest in Bitcoin through their 401k plans, and I think that's highly problematic.
Yes, and Senator Warren and Senator Durbin and I have sent letters to Fidelity and have urged the Department of Labor to follow up on this because they have this highly volatile asset that does not appear to be, it seems to be exactly the wrong kind of thing to put in a retirement account where you're looking for more stable more stability over the long term, right? Right. And let me just ask, just following up on what Senator Warren was focusing on, banks and other financial services firms have the responsibility, the duty to know who their customers are. That's how we protect against money laundering. Is that the case in crypto?
No, and I mean, I think generally speaking, there's sort of a failure of gatekeepers all over the crypto industry. You know, we've talked about we don't have the auditors being able to exercise oversight. We don't have KYC functions there. Another failure of oversight is the venture capital firms, right? We sort of expect them to exercise a restraint and exercise diligence before lending their reputation to these businesses. But venture capital firms were throwing money at FTX and similar firms without doing their diligence. So I think, as I explored in my written testimony, one of the things we can achieve by enforcing the securities laws is actually holding venture capitalists to account a little more because of potential liability as statutory sellers of unregistered securities.
Yep. So I agree with that. I think that the crypto world of FTX shows us what can happen when we don't have basic consumer protections in place. And, crypto is a relatively new thing, but we know what to do to make sure that our markets are fair and that financial institutions know their customers. So it seems to me that our job here is to enforce the laws that we have, make sure that we are plugging holes where they exist, and making sure that our enforcement agencies have the authorities and the resources they need, or we're going to see more disasters like this. Mr. Schenken, I would like to follow up and ask you a question. I want to talk about the external impacts of crypto. So crypto mining and verification is a highly energy intensive process. It requires more electricity annually than many individual countries. The worst offender is Bitcoin, but this is a widespread problem. In the US alone, crypto operations require as much electricity as all home computers or residential lighting, and this is, of course, contributing to our challenges around carbon emissions. And then there's the issue about crypto mining exacerbating local noise and air and water pollution as well. So lots of externalities, as we say. So as I understand it, crypto mining is built on a process that becomes more and more energy intensive over time. Is that correct?
Yes.
So it's inherently inefficient, is that
Yes.
correct?
The technology is bad.
And so where is the benefit of this kind of innovation, and how should we think about the impacts of this when it comes to the climate and energy use impacts? Because in fact, when crypto mines are located in communities, those communities often see their energy prices go up, their energy rates go up. Is that correct?
That's right. I visited the largest crypto mine in the country, Whinstone, which is in Rockdale, Texas, just outside of my hometown of Austin, Texas. Local citizens are upset. It raises the cost of electricity for all citizens, and it also uses an enormous amount of energy. It took over a former Alcoa aluminum smelting plant that had been abandoned, and now we are using it to mine ephemeral digital assets of no productive value. I think that says a lot.
Thank you. Thank you, Mr. Chair.
Thanks, Senator Smith. My understanding is Senator Sinema is joining us remotely. Senator Sinema
Yes.
from Arizona.
Thank you, Mr. Chairman, and thank you to our witnesses for being here today. Arizonans are always interested in investment opportunities that allow them to build better lives for themselves and their families, especially in the last few years in conversations at the grocery store, the gym, the coffee shop, or the kitchen table. Arizonans have been talking about cryptocurrency, the hype, the skepticism, the questions of how it works and how it will work going forward. Like most Arizonans, I'm a skeptical optimist. I believe in the future and the potential of this technology, that it can be a force for good, and that it can ultimately make people's lives better. But also clear-eyed about what's happening right now, how technology and anonymity can be misused and abused, and how people are being deceived and defrauded. The collapse of FTX is just one of many recent market events that have shaken investors' faith in the ecosystem. Some will say that this is about the ecosystem as a whole. Others will say this merely applies to centralized entities and that this criticism should not apply to more decentralized projects. But even in the context of decentralized projects, we need to understand how dispersed ownership truly is. So this is a complex issue, but I want to put the focus where it should be, on everyday Arizonans, many of whom put their faith in a technology that appeals to our independent leanings and our natural skepticism of government and centralized control. So I believe we have some obligations to everyday Arizonans. First, to make sure they have the information they need to understand risks and opportunities, and ultimately to make investment decisions that work for themselves and for their families. Second, to grow the U.S. economy and protect the integrity of our capital markets. Third, to provide a regulatory framework that responsibly promotes innovation here in the U.S. while increasing funding for enforcement to ensure that any bad actor is pursued quickly and harshly. So protect investors, protect the economy, promote innovation, go after the bad guys. It's pretty fundamental. So I'd like to turn to Professor Allen and thank him for being here. Your testimony cites a Financial Times article entitled "Let It Burn" that calls for crypto to do just that, to burn down as a fully unregulated business. So let's be specific. In the cases of FTX, Terra, Luna, Celsius, and others, who exactly got burned?
It was the investors.
That's right. I also want to apologize, Professor Allen. I misnamed you there for a moment. I apologize. In other words, it was investors, right? Everyday Arizonans, people who work hard for the money they make and are just trying to provide for their families, save for their kids' college, or take that vacation they've always dreamed of. The founders didn't get burned, even if ultimately they got arrested. It's regular people who got burned. And that's why it frustrates me when people say flippantly, "let it burn," because that's the hard-earned savings that everyday people invested in good faith with promises of big returns. And for FTX customers, all of that is now gone. Now, most people had no idea they'd find themselves as unsecured creditors, unlikely to get back the investments they'd entrusted to Mr. Bankman-Fried and others. And they're last in line behind banks, lawyers, other lenders, and venture funds. For months, I've had people in Washington tell me and my staff that new legislation isn't necessary here. They say that there's sufficient regulatory authority and that the regulators should just handle it unimpeded. But my question is, where were the regulators? I was encouraged to see fraud charges pressed against Mr. Bankman-Fried and his subsequent extradition and arrest. But let's be serious, that was reactive, not proactive. And frankly, it's the least that government could do. And perhaps most importantly for all those regular Americans, it's not going to get them their money back. And others will say that this is a classic case of buyer beware. It's clear that due to murky jurisdictional issues, unanswered legal questions, and a lack of regulatory clarity, investors are having a difficult time accurately pricing risk. In finance, we learn that the return on your investment should be related to the risk that you bear. But if you can't price the risk, it's hard to understand what return you should expect. And that cuts at the core of how a healthy market should function. Professor Allen, your testimony highlights a number of ways that greater regulation enforcement can be valuable for investors. And I'm interested in identifying specific ways that we can assist investors in quantifying the risk they may be taking on. Are there specific disclosure or registration requirements that you believe may assist investors in more accurate price discovery?
Thank you, Senator. So first of all, I want to point out that the let it burn argument may seem harsh, and it's not one that I advocate for this reason, but it may seem harsh to the individual investors, but it's advocated in the sense of trying to protect people who haven't invested in crypto from broader financial failure. So it's not as harsh as it might seem. We're trying to find a regulatory regime that can protect non-investors as well as investors. And that's what I've tried to advocate for in my testimony. In terms of protecting investors, as I've said, I don't know how you can really protect them from crypto assets with more disclosures, because what are you actually disclosing about an asset that has nothing behind it? I think that the securities laws are effective in requiring registration, which means people who have assets with nothing behind them won't be able to offer them in the first place. And that, I think, is the value, the ex ante value, as you said, instead of an ex post enforcement action. I think that is the value of applying the securities laws here. And yes, I wish they had been enforced more aggressively in the lead up to this. I think the SEC has not had enough resources. I also think that the SEC has faced a lot of significant political pressure to back off from the crypto industry. It received letters from congresspeople last year saying, don't look at FTX. So I think that full-throated support from Congress for the SEC's investor protection mission could be very effective in increasing enforcement in this space.
Thank you, Professor Allen. Thank you, Senator Sinema. Senator Toomey has one last question, as I do, and then we'll wrap. Thank you.
Thanks, Mr. Chairman. I think during the course of this hearing, we haven't talked as much as we ought to about some of the, I think, really exciting and terrific applications that the crypto ecosystem makes possible. One of the categories that comes to mind is the ability to use stablecoins in conjunction with smart contracts. Basically, it turns into what I think of as programmable money, where you can write into the code a payment that will occur based on some exogenous and verifiable event, and the payment requires no human intervention. It just happens when the exogenous event occurs. So, Ms. Schulp, I wonder, first of all, could you comment on whether you think there's a lot of future in this idea of programmable money? And then secondly, I think you're familiar with the legislative framework that I've laid out for stablecoins. I think the heart of that is the requirement that we have 100% cash and cash equivalents as a backing for a stablecoin, and oversight by the OCC, but not the Fed. And I wonder if you would comment also on whether you think that is the right approach to regulating stablecoins.
Of course. So I do believe that stablecoins have a lot of promise, not only in terms of the programmable money concept that you state, but also in terms of just being a faster and more stable way to work within a digital ecosystem rather than relying on kind of our current creaky payment rails. Stablecoins can offer a lot of alternatives in that space where we have truly digital money. I am familiar with your legislation, and I think that it addresses what is one of the, I think, most obvious risks in the stablecoin space, which is the concern that stablecoin issuers do not have stable coins because the reserves that they have behind them might not be what they say they are. I think that there are a number of ways that you can go about creating a regulatory regime to take account of that risk. I myself have proposed kind of a disclosure-based framework that could be put into place by something like the SEC. In fact, it's very similar to the disclosure framework that you have proposed with the OCC. I do think it's important to separate that type of regulatory function from the federal monetary regulator, so that the Federal Reserve is not the one charged with handling regulation of kind of a money substitute here. There's a lot of conflicts of interest that can exist in that space, and I think it's wise to keep stablecoin regulation, which is something that I think is kind of low-hanging fruit at this point. There's obvious risks, and I think there are pretty obvious ways to deal with those risks in pretty simple fashion. But we should keep that type of regulation separate and apart from monetary regulation.
Thank you.
Thank you. And my question, in fact, thank you for that answer. Professor Allen, my question is in part follow up with your answer to Senator Sinema about the difficulty of regulating crypto. Crypto firms have called for regulatory clarity, is a term that some of them use. Do you think crypto platforms could mostly comply with actual regulations?
No, I don't. And I think when they're calling for regulatory clarity, what they're asking for is bespoke regulation that they can comply with.
Okay, good answer. Thank you. Thanks to the witnesses for your testimony. The events of this week should be a warning to others about accountability, not just in crypto.
All right, guys. Okay, the committee has adjourned. No, i-discuss ko lang na mabilis to, no. So, for those that are listening today, couple of things, no. Siyempre kumain muna tayo. Wait lang. Kailangan kumain muna ako, di ba? Okay, so thank you for listening, Miranda. Let me try to dissect couple of points, no. Unang-una, this for me, the guests are Professor Allen, professor in College of Law in the Washington American University. Kevin O'Leary, investor ng Shark Tank yan. Jennifer Schulp, no? Siya yung Director of Financial Regulation and Studies, Center for Monetary and Financial Alternatives ng Cato Institute. Yan. And then, si Ben McKenzie, yung medyo one-worder kanina. Actor yon ng OC. I'm not sure if you guys are watching OC. So, couple of things, guys, no? Tingin ko, the hearing kanina, sorry for the word, no? The hearing is nonsense. No, it's an echo chamber, Miranda. When I say it's an echo chamber, people in that room already knows the agenda. All right? And people in that room already knows what to do. All right? The good news is it was a very quick hearing, no? What I heard about from ang gusto ko malaman dito are there actionable items. Yun yung importante bilang isang trader, no? So there are a couple of takeaways. Number one, yung bipartisan bill to talk about crypto regulation, no? That's number one. Number two, Senator Loomis will revive, quote unquote, kay Miranda, they will revive the initially proposed crypto regulation, no? So, yung detalye, tinalakay nila with Congressman Waters kahapon. Itong Senate hearing na to, there's no one involved in FTX here. These are witnesses, no? These are witnesses. And a couple of things. Unang-una, si actor Ben McKenzie, matagal ng cynical or cynic, or cynical means questionable agad siya, no? Matagal niya na kina-question ng crypto. So wala nang bago dyan. Si Kevin O'Leary, good that he is there kasi investor and he is also into NFTs. I think mga 2021 lang siya sumali. I was hoping that the hearing could have invited people like, si John Ray III, kaso nasa Congress siya. So, manonotice mo, before all of the Christmas break, nag-aagawan lahat, di ba? May SDNY, merong Congress, may Senate, may SEC, may CFTC, lahat sila nag-uunahan ngayon ng attention. So there is something going on here. All right. So, couple of things na tingin kong pwede mangyari. Ang nakakagulat dito, kaya sana na-pick up to ng media, Miranda, no? Sana na-pick up ng media to. Professor Hillary Allen said, ito, and I quote, sabi niya, SEC, i-rephrase ko, no? SEC was asked by Congress not to touch FTX. Yun ang mabigat to. Sana na-pick up ng media yun, ha? And that is BS. Sorry. Diba? So apparently, itong si SEC hindi kumikilos because Congress, sabi ni Professor Allen, harap-harapan, ha? Sabi ni Professor Hillary Allen, harap-harapan sa Senate mismo. Sinabi niya, and I quote, there's Congress asking SEC not to touch FTX. So it was a darling of the crowd, no? So sana they can invite him again. What does he mean by that? Because apparently it's a big one. Kung ako ang ABS-CBN, big news yun. Alright, so, it's an echo chamber. It was a waste of time, no? I think alam na nila yung gagawin nila. Nagpa-beauty contest lang yan dyan. They wanted to be seen that they are involved, they're saying something. Siyempre, maraming naapektuhan ng FTX eh. At alam nyo, Miranda, matagal na tong crypto regulations na to. If you guys have been watching me since, almost 2 years na, I've been covering crypto regulations. Bakit natenga yan? Kasi inuna nila yung infrastructure bill. Di ba? There was even a senator na siningit lang niya yung question niya about climate change sa infrastructure bill. Kasi you need to remember sa infrastructure bill, pag merong isang kumontra sa'yo, tanggal na yung amendment mo. Kailangan unanimous yun. And the infrastructure bill wanted to provide a framework on how to regulate crypto kasi they need to get around $10 billion, if I'm not mistaken, from crypto by taxing it. Hindi natuloy, di ba? Natenga yon. So infrastructure bill is supposed to be the gatekeeper. So for the most part, hindi umandar yung part na yon. So ngayon, sinasabi nila, bubuhayin daw nila. Senator Loomis was saying, bubuhayin nila yung proposal nila. So couple of questions. Unang-una, it was an echo chamber. So everyone knows what they're supposed to do. Number two, it's a waste of time. Number three, people there that were invited are already known skeptics. All right. Number four, aside from it being a waste of time again, number four is that wala akong nakitang dapat na in-invite nila from FTX, nasa Congress kasi. I think last but not the least is itong mga senators na to, again, in my own opinion to, no, beauty contest, they wanted to be known na, oy, senator ko yan, concerned sa akin sa crypto, no. So I think it's just a very waste of time, to be honest. They could have just met each other and say, you know what, meet na tayo, okay, ito yung gagawin natin. But then again, these are politicians. No, we need to respect their culture, their ethical norms, etc. So it is what it is. But then again, pinanood ko sa inyo to kasi I was hoping, lumabas yung word na iniintay ko eh. One senator said, are we supposed to ban crypto or are we supposed to isolate them from the banking industry? And majority of the witnesses said, I think dapat i-separate natin. No one piggybacked on the word banning. Kasi ang worry ko dito, kapag na-pick up ng media yung word na banning, lalabas sa media mainstream yan. Okay, the senators wanted to propose ban crypto in the US. FUD yun. Bagsak ang crypto niyan. You need to remember that's one of the things we need to avoid. The headline that says, di ba tapos na tayo for China FUD 2021. Wag naman sana magkaroon ng headline, crypto will be banned in the US simply because FTX is a problem. Sana wag ganon kasi malaking problema yon. Pag sinabi nilang crypto is gonna be banned in the States, bagsak ang crypto, guys. I'm not kidding. I am not kidding you. That is the last straw if ever. Wag lang sanang i-pick up ng media. So that's gonna be one of the reason why sinabi ko makinig tayo, manood tayo. Because the Senate has the power to do that. No, as far as I'm aware, the Senate can do treaties and even bigger. Again, I don't want to use those types of words, but they can make big noise. No, now couple of things as well is ang problema ko dito sa hearing na to, puro motherhood statements ang naririnig ko. No, I don't know if it's because wala silang time. I've downloaded their statements. Meron akong copy ng buong statement ni Professor Allen. This is a 20-page document. I have an executive summary, etc., etc., etc. Siguro binasa na nila to ahead of time. But for me, for the most part, Miranda, medyo nakulangan ako sa sustansya ng pag-uusap nila. No? Medyo kulang ako. At if they wanted to be able to regulate, I think that's gonna be the name of the song that everyone is singing in the hearing. I wanted to have more definitive steps kung anong klaseng regulation. Someone was even comparing FTX into Western Union. They don't have KYC, blah 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 blah. For me, structurally, it is good to hear. It's very good to the ears, but structurally and infrastructure-wise, it cannot be that way because cryptocurrency was created. There's cryptography, diba? There is cryptography. You don't need to put your name in the wallet. Ngayon nga lang nagkaroon ng mga sa Ethereum scam, you can put wallet names already. Pero technically in the old crypto, talagang series of numbers and letters lang yan. Meron lang nonce na technology. The number should only appear once. So for the most part, medyo kulang ako sa sustansya and hindi ako nakulangan ako in terms of anong definitive steps, no? Kumbaga dumating yung mga senator doon, meron na talaga silang agenda, kailangan lang nilang marinig na tama yung gagawin nila with having the witnesses there. Okay. So, takeaway natin, Miranda, between the next 24 hours, pag may lumabas na negative issue from Senate, for example, na pick up ng media, merong sinabi tong senator, magbabanning daw. Wag naman sana, Miranda. No? Kaya that's the reason why pinanood ko kayo ng show na to para at least makita ninyo that at the end of the day, malaki pa rin ang epekto ng Senate in terms of, national regulations or laws to be created. So let's all be watchful of that. Ngayon, ako muna ay iinom ng kape, medyo naantok na ako. Pero susubukan kong mag-live ng FOMC hearing. No? Malaking issue din to kasi kung masaya tayo sa CPI, pag lumabas yung FOMC mamaya, it will cement the softening of Fed. This is the first time that this will happen, no? With the exception of July, no? But this time, this is going to be very, very important for all of us. Kasi pag ginawa nilang 50 BPS yan, tulad ng kahapong CPI, gaganda yung tono. Actually, lahat, pati ngayon stock market is bullish. Diba? So, gusto ko sanang bantayan, pero pag nakatulog na ako, kayo na lang bahala. Huwag niyo na akong istorbohin. Okay ba yun? Bawi na ako, Diba? So, teka nga lang. Yeah, Nasdaq is actually green, no? Everyone is green in the stock market today. So, halos on the Nasdaq, specifically to the tech stocks, no? Alright, so binabati ko nga pala maraming salamat, no, sa mga nakikinig sa atin today. Sana may natutunan kayo. Bakit importante na makinig tayo kay Senate hearing? Parang Philippine Senate yan. Maraming mga soap opera dyan, kumbaga, so to speak. Alright, sige, balitaan ko kayo maya-maya. See you at the 3 o'clock. Good night for now. I'll talk to you later. Pag wala na akong live, tulog na ako. Huwag nyo na akong istorbohin. Oy, sige, don't forget, no? Please don't forget to also click on subscribe.